How banks treat you at every level of wealth. Imagine walking into a bank. Same building, same logo, same chairs. But depending on how much money you have, you're treated like a burden, a customer, or a VIP they'll do anything to keep. Banks don't treat everyone equally. They treat you based on your value to them. And today, they'll break down exactly how banks treat you at every level of wealth, from broke to billionaire. Because once you understand this, you'll never look at your bank the same way again. Section 1. Broke/low income. The costly customer. At the lowest level, banks don't see you as an asset. They see you as a source of fees. You open an account, and what happens? Monthly maintenance charges, ATM withdrawal fees, SMS alert charges, transfer fees, overdraft penalties. Every small mistake costs you money. Miss a minimum balance? Fee. Late payment? Fee. Use the wrong ATM? Fee. And hey, race the harsh truth. The less money you have, the more expensive banking becomes. Banks design it this way. Why? Because they don't make real profit from your savings. They make money from your mistakes and limitations. You're not getting financial advice. You're not getting special offers. You're not getting flexibility. You're just managed. And if you complain, you're just another account number. Section 2. Working class. The product user. Now you start earning a steady income. Salary is coming in monthly. Things change. Slightly. Now the bank sees you as someone who can use their products. They start offering you debit cards, small loans, mobile banking apps, salary advances. Sounds good, right? But look deeper. These products are designed to keep you dependent. You're encouraged to take small loans at high interest, spend using cards instead of saving, stay within a cycle of earning and spending. The bank isn't trying to grow your wealth. They're trying to increase your usage. Because the more you use, the more they earn. You're no longer just paying fees. Now you're generating consistent revenue for them. Section 3. Middle class. The debt machine. Now you're earning more. You've built some stability. And suddenly, the bank starts treating you better. Why? Because now, you're perfect for debt. This is where the real game begins. They start offering personal loans, car loans, mortgages, credit cards with high limits. And they make it sound attractive. Pre-approved, low interest, flexible repayment. But what they're really doing is locking you into long-term financial commitments. At this level, banks love you because you are predictable. You earn regularly, spend consistently, repay slowly, which means you pay interest for years. And interest is where banks make their biggest profits. They don't want you debt-free. They want you comfortably in debt, not struggling enough to default, but not free enough to escape. Section 4. Upper middle class. The priority client. Now you're doing well. You have savings, investments maybe. Your income is strong. And suddenly, the bank changes its tone. Now you get priority service, faster customer support, relationship managers, better loan rates. You're no longer just a user. You're now a valuable client. Banks compete for people at this level. Why? Because you have money and movement. You're saving, investing, borrowing, and spending. They want to manage your financial life. But hey, race the twist. Even here, they still profit from your activity, just in a more polished way. Instead of charging obvious fees, they earn through investment products, managed funds, hidden charges. You feel like you're winning, but the bank is still ahead. Section 5. Rich, the investment partner. Now we step into wealth. You have serious money, not just income, assets. At this level, banks stop treating you like a customer. They treat you like a partner. You get access to private banking, wealth managers, exclusive investment opportunities, lower interest rates. Notice the shift. Earlier, banks were selling you loans. Now, they're helping you grow your money. Why? Because your money is powerful. Large deposits mean more liquidity for the bank, more investments, more influence. They want to keep you happy. So they offer personalized advice, tailored strategies, direct access to experts. At this level, you don't chase the bank chases you. Section 6. Ultra rich, the rule maker. Now we enter the top 1%. This is where the rules completely change. At this level, you don't just use banks. You influence them. Banks offer you custom financial structures, tax optimization strategies, access to private deals, insider-level opportunities. You can negotiate loan terms, interest rates, Investment access. In some cases, banks will lend you millions at lower rates than a normal person borrowing a small loan. Why? Because you're not risky. You're powerful. You have assets, connections, and leverage. And here's the biggest difference. The rich use banks to make money. The poor use banks to survive. Section 7. The real truth. Banks are not evil. They are businesses. And like every business, they prioritize profit. The way they treat you depends on how much money you have, how much they can earn from you, how risky you are. If you're broke, you're charged. If you're average, you're sold to. If you're wealthy, you're served. If you're ultra-rich, you're respected. Same bank, different experience. Section 8. How to use this knowledge. So what should you do with this? Simple. Stop seeing banks as helpers. Start seeing them as tools. Use them wisely. Avoid unnecessary fees. Be careful with debt. Don't fall for every offer. Focus on building assets. Because the goal is not just to earn money. The goal is to reach a level where the bank works for you. Outro. Now you understand the system. And once you see it, you can't unsee it. The question is, at what level are you right now? And more importantly, what level are you moving towards? If you want to learn how to move up financially and start making money work for you, then make sure you watch my other videos. And don't forget to subscribe, because the next one might completely change how you see money.